Hello and welcome back to Global Value. In today's video, we will be performing a fundamental stock analysis of Domino's Pizza, ticker symbol DPZ, by taking a look at the company's financials. Currently, Domino's is trading for just over $350 a share. Over the past year, they're down about 12%. Over the past 10 years, they're up with a 26% compounded annual return. And since 2005, over the past 17 years, they've been able to return about 20% compounded annually. Really, Domino's has been one of the best performing stocks since the global financial crisis. So Domino's is trading about $15 over its 52-week low, which has been cut down significantly from its 52-week high of almost $570 a share. At the time of recording this video, Domino's is about a $13 billion market cap. Some background about the business. Domino's Pizza is a restaurant operator and franchisor with nearly 19,000 stores across more than 90 international markets. The firm generates revenue through the sales of pizza, wings, salads, and sandwiches at company-owned stores, royalty and marketing contributions from franchise-operated stores, and its network of 26 domestic and 5 Canadian dough manufacturing and supply chain facilities, which centralize purchasing, preparation, and last-mile delivery for the firm's U.S. and Canadian restaurants. With roughly $17.7 billion in 2021 system sales, Domino's is the largest player in the global pizza market, ahead of Pizza Hut, Papa John's, and Little Caesars. Domino's Pizza was founded in 1960 and is based in Ann Arbor, Michigan. So we'll be performing an 8-pillar analysis as popularized by Everything Money. Before we get into it, let's get ourselves in the right mindset by covering the 4 principles of value investing. Principle number 1, you're not buying and selling pieces of paper or a line that goes up and down on a chart. You're buying fractional ownership of a business, and you should think of it as if you're buying the whole business. Principle number 2, insist on a margin of safety. All companies are worth the sum of all cash they'll produce from now until Judgment Day, discounted by some reasonable interest rate. If you can figure that out, then you should pay a price well below that. Principle number 3, Mr. Market. Your job is to make Mr. Market work for you and not the other way around. Mr. Market gives you quotes on businesses every few minutes. When he's providing you with quotes that are way too low, you should be buying from him. And when the quotes are way too high, you should be selling. And principle number 4, circle of competence. As investors, we don't deserve to make money from things we can't understand, and to ask the question, is this within my circle of competence, is to answer the question. So with that mindset, let's get right into our stock analysis. Starting off with pillar number 1, we want Domino's average 5-year PE to be below 22.5. So currently they're trading at a 26 PE, and looking back over the past 5 years, their average PE is about 35. So this one's going to be an X. Pillar number 2, we want Domino's average 5-year return on capital to be above 9%. Domino's is an elite company when it comes to return on capital. Over the past 5 years, they've actually averaged a 91% return on capital each year. That is 10 times that metric we were looking for. These guys are hyper efficient at getting solid returns on their investments, and being able to sustainably produce this high of return on capital puts Domino's in elite territory. This is a massive check for pillar number 2. Pillar number 3, we want to see 5-year revenue growth. This one's another check. In 2017, they had $2.8 billion of revenue. They grew this to $4.3 billion in 2021. So back-to-back checks. For pillar number 4, we want to see 5-year net income growth. This one's another check. In 2017, they had about $278 million of net income. They grew that to $510 million in 2021. For pillar number 5, we want to see decreasing shares outstanding, and that's exactly what we see here with Domino's. They've decreased their shares from about 48 million shares outstanding in 2017 down to about 38 million in 2021. So that's our 4th check in a row. This means that as an investor, you have more owner earnings coming your way. Pillar number 6, we're looking for 5-year free cash flow growth. Domino's has done a great job growing cash flows. They've more than doubled it over the past 5 years. Free cash flow is the column in blue here. They've more than doubled it in the past 5 years. 2017, they had $251 million of free cash flow, and that's increased to $560 million as of the end of 2021. Domino's 5-year average free cash flow comes out to $400 million a year. So that's going to be used going forward on pillars 7 and 8. So pillar number 7, we want their net debt to be below their 5-year average free cash flow multiplied by 5. We want them to be employing reasonable amounts of leverage in their business. It's just like personal finances, where the more debt you have, the harder it's going to be when things go wrong. Domino's currently has $5.1 billion of debt. Multiplying that $400 million of free cash flow times 5 brings us to $2 billion. They have a lot of debt here. They've increased this as well over this time. This is more debt than we'd like to see. It's likely that they're taking out a lot of this as they're financing and opening up new restaurants. One thing a 10K can tell us here is how long does it take them to turn a profit from when they open a new restaurant. That can tell us if some of this debt is more manageable. Finally, pillar number 8, the big pillar of them all, we want their market cap to be below their 5-year average free cash flow multiplied by 20. Domino's currently has a market cap of just under $13 billion. Multiplying that 5-year free cash flow of $400 million a year times 20 brings us to $8 billion, so roughly 2/3 of their current market cap. Based on their free cash flow profile right now, Domino's looks expensive. So in summary, Domino's checks the box on 5 out of 8 pillars. They average huge returns on capital, they're growing steadily, they're buying back shares, they've more than doubled their free cash flow over the last 5 years. However, they miss on our 2 valuation pillars for PE and market cap, and Domino's employs a lot of debt in their business. To learn more about the business, read through their annual report, dive into their 10K, build up that circle of competence around Domino's, work to understand their competitive advantages or lack thereof, and see if you can come to reasonable projections of where Domino's as a business is going to be 10 years from now. That's it for our analysis of Domino's Pizza, ticker symbol DPZ. If you enjoyed the video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for taking the time to learn about Domino's, and have a great day.